I'm here to tell you that commercial property is the easiest way for you to accelerate your portfolio wealth and to give you cash flow. My name is Helen Tarrant. I've been teaching everyday Australians how to invest in commercial property since 2016. I've consulted on thousands of deals. I've done over $1 billion worth of deals in commercial property, and I'm going to share with you the simple, easy way to get started in this short video. I'm going to give you a quick launch tip on how you can go from zero to invest in commercial property in as little as 60 minutes. Now, let's get started. So, investing in commercial property, the number one thing you need to consider is why you want to invest in commercial property. For a lot of people, that is cash flow. Cash flow, cash flow, cash flow. Because cash flow makes the world go round, let's face it. Because at the end of the day, cash flow puts food on the table, pays for the school fees, the holidays, and the renovations for your house, or the upgrade to your new property. So without cash flow, you're not going to get there. At some point in your life, if you chase growth, which is your residential property, you're going to run out of steam and you're going to need cash flow. So commercial property should be coming into your portfolio a lot sooner than later to help you in your investment journey so you can capitalize on your growth much sooner and faster. Combining both of them gets you there faster, which means you can buy sooner and retire sooner. However, most people get commercial property investing wrong. And the one thing they get wrong is how do they get started, right? They just buy anything that trigger happy. They say, oh, something with a bit of cash flow, something with a bit of growth. No long-term strategy. Number one thing, have your goals set. I need to replace 50,000, 100,000, 20,000, 500,000 in passive income. How do I get there? And guess what? Here at Unicorn Commercial Property, we have a specific formula who can help you get there. We can plan out how much passive income you need and work all the way back to how much deposit you're going to need, plus what your first property is going to look at. So make sure you click the link below, either register for one of our upcoming events or booking for that free strategy call. Now, the goal, work out what you need. It doesn't mean you need to replace your current income. What you need to do is look at what kind of income you need to replace to feel comfortable so that you can maybe work a little bit less, feel a little bit more security in your life, right? And that might be just as simple as $30,000 a year, right? So you start with that in mind. So you cross that boundary of replacing that income of $20,000, $30,000, $40,000. Now that's what you first should be looking at as your first lot of investments. So number two then, you look at the criteria of what property is going to help you replace that. So where is your deposit coming from? Is it coming from a drawdown in equity from your residential properties? Is it cash in the bank? Is it from your principal home that you're refinancing? Or is it a gift from the family, or you coming together with your friends and family to buy one together? All of those things impact on the numbers of your commercial property. So for example, if you are drawing down equity and you need to go and then borrow again to buy a property, that's 100% borrowing. So therefore, you need to look for a higher yield, as in cash flow return, versus someone who has cash in the bank as a deposit. So these are the things you need to look at and pay attention to when you go to step two, which is working out the criteria of your property. If you're 100% financed, and right now in this market, you need to hit about 6.75% in minimum yield return, to preferably 7%. Now that's most likely going to be a regional property. If you've got cash, you don't need to go that high. You're probably somewhere around that 5.7 to 6%, which means that you can stay in the metro area. So depending if you've got cash or it's equity drawdown, it changes where you're looking at for your first property. Then I want you to then spend some time. Number three is looking at the criteria of your property. So are you risk averse? If you're risk averse, then you don't want to be in regional because you're not going to be able to sleep at night. So you might mean that you need to stay in metro, and it might mean that you might buy a property that may be negative for the first 12 months, not forever, because in commercial property, if you're ever negative, you really only ever negative for about 12 or 18 months until the interest rate comes down. And we all know the interest rate is probably most likely going to come down sometime next year. So what we're going to see here is that you need to work out, number three is your criteria. So where you feel most comfortable buying the type of properties. Is that a medical tenant? Is that a trade tenant? Is that industrial property, a warehouse, office space, or retail? Depending on your history and what you feel comfortable with, here at Unicorn Commercial Property, we do a lot of work with our investors to build out that portfolio, that blueprint, and we spend time so that you can have a look at have a look at case studies, so we can go and find properties based on your case study. So that's the number three thing. And finally, number four thing you need to do is then execute, whether that's engaging a buyer's agent or going out there and doing it yourself, getting some education behind it, a team to support you, right? So making sure that you've got your entity set up, make sure you've got your finance checked so you know you can definitely borrow to that level. You don't need a pre-approval in commercial property. What you need is a high level from a broker who specializes in commercial property what you can actually borrow, right? And that might be on a lease stock basis based on the lease because you can't service anymore. It might be on a full document basis like you do in your residential for your commercial. Whatever it is, you need a broker who can help you with that. And then you are actually all ready to go, right? Once you've got the entity, finance check, you're ready to go, you're searching for the property, make a decision whether you're engaging a buyer's agent or going it yourself. Go out there, based on your criteria, go and find that property. Once you've found that property, don't spend time lining up your ducks. What you need to do is actually use that time to assess the property, see if it's right. So look at the returns, as in how much is the cash flow of that property going to be versus how much you're going to be paying for that property. So for example, you want to buy $1 million property and the net rent, so after outgoings, remember commercial property is the tenant pays all the outgoings. So after outgoings, the net rent comes in at say $60,000. That means that it's a 6% yield on $1 million if you're purchasing at $1 million. Now, the most important thing here is to do your research, to understand that you're paying the correct amount, as in the correct price for that property. So that depends on the return, right? You're paying the right return for that property. If you are, make an offer. Go in there, make an offer, and do your due diligence. Due diligence is the most complicated part of commercial property, but remember, you have a team behind you who can help you out. Don't rely on your solicitor to do your due diligence or your accountant. Make sure you get a professional to do it. Your buyer's agent should be able to help you do it very thoroughly. If not, speak to a professional, a strategist, or someone who's done it, who's a consultant, whoever it is, to help you do due diligence in the actual industry, right? So once your due diligence is done, and you've got your finance, you've got your valuations, come back on price, everything ticks the boxes, you're all happy. If you need to renegotiate, this is the time to do it before you go unconditional. Once you're unconditional, now you need to find a property manager who can take over the management of your property, and you can get ready for settlement, making sure you speak to your sellers, they get through all of those loan docs. And then really you settle and wait for the cash to come in. And you're literally going to wait to the end of the month, realize there's more dollars in your bank account than you need to pay out, and you're going to have the aha moment and you're going to want to do it again. Really, commercial property investing is that simple, and you can get started right now simply by booking a free strategy call with the Unicorn team, or firstly do these following exercises. Go on to realcommercial.com, have a look in your local area, the properties that you really like, right? Have a look, just get an idea of what you really like. So this is your quick start. So look for something within an hour to 2 hours drive of where you are. So get that comfortability, right? If you're not gonna invest in commercial unless you're comfortable. So get the comfortability of it. Start looking, start getting some information memorandums, they call it IMs. Start reading, start working out the returns. So the most important thing you gotta work out is, what are the outgoings your tenant's gonna pay? What is your net rent? So make sure in commercial property, the tenant pays all the outgoings. So that means you've got to take out every single outgoing and then come to the net rent. So make sure that you take out management fees, your land tax, your insurance, council rates, water rates, body corporates, any of those things. Maintenance in terms of, replacing an aircon is not part of it, but make sure you take out all of those and then work out what that net rent is. Once you've got that net rent, then ask the agent what the sale price is, work out that return, and then once you've looked at 5 or 10 of them, you'll start to develop what we call a benchmark of what averaging it's going for in that area. And that might be, let's say you want to do just medical tenants. You might be seeing 4, 5, 10 medical tenant properties in your area. And by looking at those 10 properties, you finally understand that it's probably yielding going to be about 5.5%. Is that going to be enough, right? For you, that's your first way of getting started, is to understand if that 5.5%, for example, in your local area for a medical type tenant on a good lease is going to be enough for you. If it is, then you can shortlist properties from that 10, make an offer, move forward. But don't forget, as you're going through that shortlisting process, to contact your broker to make sure you get your finance lined up and your accountant to get your entity set up. But these are just some quick tips for you to look and understand the market. If it doesn't, if 5.5% or 6%, whatever it happens to be, doesn't meet your criteria and you're negative and you don't want to be there, then you need to look further afield. But the most important thing is for you to establish your first level of understanding of commercial property. And the only way to do it is to go and search and look at these properties, at least 10 of them, so that you understand what you're looking at and that what you're going to be investing in. So once you've established that, you're going to have a lot more clarity. Then you can build out the rest of the strategy. But remember, at any time, you can book in for a free strategy session here with our Unicorn team. If you like that, smash the subscribe button, leave us a comment, join us in one of our live events, and I'll see you in the next video. Bye for now.